Welcome back. Let's get into that market picture now. And of course, as usual, we start off in the Far East where Asian shares mostly ticked higher this morning, tracking some of those modest Wall Street gains after the United States Federal Reserve Chair Jerome Powell started to cut interest rates as expected, 7 to 3. He did offer mixed signals, however, on what policy easing would happen in future, keeping investors cautious, of course. China stocks did manage to close higher, though, on rising investor bets that Beijing will lower its domestic rate to help bolster that economy. Early in the day, however, the Bank of Japan kept its monetary policy steady as expected, though there were some expectations that the Japanese central bank would ramp up its already massive stimulus. It was all about central banks, and of course that theme continues today on the local front. But out in Asia, we saw the Hang Seng dip out, unfortunately, not able to gain, and the only counter sitting just over 1% lower, while the Shanghai Composite also managed to pick up some steam just below that 3,000 point mark, while the Nikkei added 0.4% out in Japan. Over in the United States, the benchmark S&P 500 index ended almost flat as that Federal Reserve policymakers decided to give some mixed signals to the market about their next move after cutting interest rates by 0.25 percentage point in a widely expected move. It's the first time in quite some time that they've cut interest rates twice in a row, and now it seems to be the case between 1.75 and 2% there for those rates. The Dow Jones Industrial Average rising 0.1%, 27,147 points. S&P 500 inching towards 3,006 points, while the Nasdaq Composite did, however, drop 0.1%, 8,177 points. Let's get into that market picture out in Europe then, of course, and that has certainly been looking at how things have fared when it comes to the China-US trade talks, but also central bank stimulus and how that's going to play its part in the market. Of course, not so long ago, we saw the ECB put in some measures to try and stimulate that economy. However, how has the US's stimulus package sort of helped the rest of the globe as it decreases just how much you have to pay with regards to interest rates? Well, it seems that a sense of positivity has come right across that board there, with all three major European markets sitting in much better territory. On the local front, however, that hasn't translated. So a few jitters across that market picture. So a whole lot of red, as you're seeing right now. 0.2% down for the all share, just above that 56,100 point mark. And a sense then of negativity as well as we head into the industrials, with, of course, Naspers sitting in a precarious territory, considering that process listing, which does happen as well just next week. Over into the commodities segment as well then, with regards to those shares, resources not doing too well, however, at this point in time. So a sense of negativity as well filtering through into that. While on those commodities themselves, it seems to have been a bad day for oil, as that continued to, of course, slip from those spikes on Monday. And now that's come back a little bit. Although today was a little bit of a better day, we are seeing that Saudi Arabia saying that by the end of September is when they'll certainly see their oil rig come online again. So the oil price, if we hopefully get into the commodities segment, will certainly give you a better segment of how we're doing with that. It is down for now, just above that $65 a barrel mark. Of course, having sat at around $72 a barrel, we're certainly doing much better off there. But we are getting word as well from the Automobile Association that for now, the local petrol price is still expected to decrease by at least 5 cents a litre when it comes to that 95 unleaded petrol there. Below $1,500 a fine ounce for gold is where we're sitting, so not as lucrative as before. Perhaps investors looking elsewhere for gains right now, and seemingly the risk necessarily in the market and willing to forego the slice up on gold. Let's take a quick look at the currency. Quite resilient, one must say, considering the turbulence of recent times. However, today, not such a great day, back towards 14.70 against the US dollar, but it certainly is better below that 15 Rand mark, and I'm sure investors will certainly be quite happy with that figure on that front. 18.31 then for a British pound, and the euro setting you back 16 Rand 26 cents. As I've said, it's all been about central banks, and let's chat to Gary Booysen then, who joins us live from the Johannesburg Stock Exchange as we unpack that market picture from Rand Swiss, 0.3% lower. Not too much of a surprise, I suppose. The market really looking for some value then, considering that we had the cut from the Fed and Jerome Powell, the Bank of Japan deciding to hold rates. Is it a bit of a mixed picture to the globe as to what needs to be done in order to boost growth?
Well, certainly, I think there's limits to what monetary policy can achieve in terms of changing underlying real economic metrics. So, looking at it, we did get a rate cut, which is traditionally equity positive. You would expect global markets to be positive on the back of that. We did see a positive Asia this morning. It hasn't translated into South Africa. Part of the reason for that, I think, is they're calling it a hawkish cut. So, if you have a look at the federal funds futures yesterday beforehand, there was about a 56% chance that they were going to cut, so it wasn't fully priced into the market. But more than most, the polls were coming out and saying that there should be a cut. We got the cut kind of as expected, but it was really the commentary afterwards that kind of spooked markets a little bit, and there's just concerns that the reason for the cut is that we are seeing subdued global growth thanks to the kind of escalation of the trade war and the reduction certainly in exports from some economies. It's one of the major concerns. You mentioned the Bank of Japan, their central bank obviously speaking today as well. Also just highlighting that Japanese exports are under pressure while corporate profits are good, and that's enticed them to, I suppose, leave their framework unchanged and not actually stimulate further. But certainly there are real concerns in the global economy, and those concerns being highlighted by the Fed last night, and I think that feeding into our market today as well.
If that feeds into our local market, then you should expect that the same sort of situation is obviously in South Africa. Yes, we saw inflation peak up a little bit to 4.3%, but you do have retail sales still languishing, growth still languishing. It's not as if there are any major inflationary issues unless you take that oil spike into massive consideration. Reserve Bank cutting, holding?
At the moment, the expectations are that they will hold, that we're not going to see a cut. You're clearly making an argument that we should see a cut, and certainly if you look at our growth figures, I think a little bit of relief from our central bank would be warranted. Of course, our currency is quite volatile. We've seen it, well above 15 rand to the dollar recently. If we do hold, we should see a firming up of our local unit, because obviously with the Fed cutting last night, if we do stay and at least if we don't see a rate cut coming through this afternoon, the carry trade will play through, and I mean we will become like a more attractive destination. Certainly, I still think that there are concerns around what will happen if we're downgraded by Moody's and how that will affect the local currency and certainly the local investment climate. But yeah, I think there's a good argument to be made that there should potentially be a cut. The market and the polls are saying that we are going to stand pat today, though.
Yeah, I certainly do wonder how that will really impact South Africa's economy. And yes, the carry through when you cut interest rates is perhaps only seen in about 18 months or so, but it certainly does do a lot for morale as well for an economy like ours. Very quickly, Gary, I'm just going to touch on an equity story just behind you, and I see SAPI is the biggest loser today so far, 4.5% down right now, whereas the other paper companies are obviously sitting in better territory. SAPI next week comes out of the JSE top 40 because Naspers' process comes in, of course, 1.9 trillion rand in terms of valuation. How big a deal is that?
But certainly, it's a big deal, and it's been well telegraphed to the markets, and we've already seen kind of the unbundling of process into client accounts, and what you're starting to see now is just a repricing. So today is maybe an interesting day. Absolutely, when you see a stock like SAPI falling out of the index, traditionally it's now going to have to be dumped out of the index funds. So there are large passive trackers that become a forced seller of a stock like SAPI then, which should put pressure on the share price. Our market, while maybe not as efficient as it used to be, still has a lot of active traders in it. So when traders know that something's going to move out of the index, there's speculation ahead of it. So it's the same as the whole idea of the South Africa falling out of the world Citibank World Bond Index and what it will do to the currency. When a move is expected, people already start to price it in. So this could be active traders starting to price in SAPI. It was also futures closeout today. So you could see slightly strange prices on the market today. I mean, we had our auction at 12 o'clock, but traders obviously moving from near to far contracts today as well. So there's a lot of market dynamics at play, and I might not read too much into the underlying slide of SAPI specifically.
Yeah, I would certainly hope that it at least stays in and around that 40 rand mark, because that seems to be a kind of a threshold for now. Very quickly, back onto some other news globally as well. That oil price just above that $65 a barrel mark, that has been of keen question this week. Saudi Arabia saying that they're getting things back on board at least by the end of this month. That certainly bodes well for the oil price, and perhaps some stability will be there very soon.
Certainly, I think there was after the attacks on the Saudi oil fields, we saw the price spike up well above $70 a barrel. That in itself is very negative for global growth as well, because oil is obviously it's like energy prices are a big input into the costs of goods and services. It increases the expectations of inflation, and now that Saudi Arabia has come out and said, I suppose speculation was that it would affect around 5% of their supply. They've said that they will be able to bring their operations back online far sooner, certainly, that markets were initially expecting, and that's helped the oil price to subside back to that kind of mid-60s level where we've been trading for a fair amount of time. And it seems to be a level that the oil price is comfortable at, and it should be fairly decent for global growth.
Yeah. Gary, always great having you on board. Thank you so much for the time. I appreciate it. Live from the Johannesburg Stock Exchange there, Gary Booysen from Rand Swiss helping us unpack that market movement. Just very quickly, some other news, of course, is still happening right now. The midterm budget policy statement, which usually happens in and around the third week of October, has sort of been delayed somewhat. It now will happen on the 30th of October. We'll, of course, bring you all of the details out of that midterm budget policy statement from the Finance Minister, Tito Mboweni. And also some breaking news. Credit Suisse really saying that South Africa could lose between $4 to $8 billion if we were downgraded by Moody's in November. So that certainly does tell you a lot. That's between 59 and 118 billion rand. So that is indeed massive. But for now, we'll leave it right there. That's where the buck stops this afternoon. It's back to Nzinga right after this. Do catch us, of course, at 3 p.m. as we get into that discussion as the South African Reserve Bank unpacks that decision on whether to cut interest rates or leave them on hold.